BlackRock and the rest of Wall Street are advertising their Bitcoin spot ETFs as Google today updated their crypto ad policy. And could BlackRock's Bitcoin supply surpass MicroStrategy this year? They seem to be on track. And Avalanche has outlined a scaling solution to help Avalanche to reach 100,000 transactions per second. We're going to break this down and much more. Let's jump into it. Welcome to the Thinking Crypto podcast, your home for cryptocurrency news and interviews. If you are new here, please hit that subscribe button as well as the thumbs up button and leave a comment below. If you're listening on a podcast platform such as Spotify, Apple, or Google, please leave a 5-star rating and review. It supports the podcast and it doesn't cost you anything. Well, folks, let's start with the price of Bitcoin. Bitcoin right now over $43,000. But as I've been stating, I think we are still on the way down. And while we had this little bounce here, it may top out at 45K and then go back down to 30 to 35K range. I've told you guys I got my buy orders in for 30K, 33K, and 35K. Now, I could be wrong. I'm not saying I have a crystal ball, but we have to at least form a thesis and look at the bullish and bearish scenario and which has the higher probability of playing out. So that's what I'm thinking. Look, if Bitcoin skyrockets past 50K and goes to 60K and I'm wrong, I'm not going to be upset about that because I'm here to make money. So the higher the price goes, I'll be taking profits, of course. But as always, the markets don't go up in a straight line and support levels have to be built here. And I think Bitcoin's going to pull back and we're going to see some volatility. But macro level, I am bullish. And here are some other factors. The DXY is still looking strong here. We could see the DXY fold and start going down, and then Bitcoin and other assets will continue moving up. But right now, as of the facts of today, we are looking at DXY maybe moving up a bit more and Bitcoin continuing to go down. That's okay. Once again, finding support levels, then bouncing upwards. The slow, steady climb to new all-time highs later this year, and of course, a blow-off top in 2025. Now, remember Jim Cramer was spreading a ton of FUD about Bitcoin last week? I mean, just nonstop tweets, right? Well, Bitcoin bounced. Inverse Cramer, right? So if you bought, as he was saying, oh, Bitcoin sucks and this and that, and now, you're taking some profits on the bounce. Look, it's on the micro. It's not any major moves. You had made some money. So inverse Kramer strikes again. Now, folks, I want to highlight something here from the macro. Elizabeth Warren, yes, shady Elizabeth Warren. Today, she tweeted out, it's time for the Federal Reserve to cut interest rates. The extreme rate hikes under the Fed Chair Powell have significantly increased the cost of housing. We had a housing affordability crisis before, and the Fed has made it worse. Folks, see what's happening here? What have I been saying? The money printer is coming back. They're going to cut rates. We are headed into the next macro bull market, or we are at the start of the next macro bull market. We know Bitcoin and crypto is correlated to the stock market and global liquidity, M2 money supply. So we will see QE return. We see the M2 money supply is rising right now because the Fed has been doing a lot of behind the scenes things with the banks that they had to save last year. Many of Silicon Valley and so forth, right? So, guys, what does that mean? Higher prices for assets, and that includes stocks, crypto, real estate as well. It's incredible how these things play out, but this is what I've been saying. You have to understand the charts, the technicals, the fundamentals, the macro principles as well of we are in a debt-based system. They will continue to print money, and that drives the value of assets higher. So it's important to understand these principles and look at the market holistically. And we also got news here. Speaking of global liquidity, Hong Kong court orders liquidation of Evergrande. How many of you remember that, right? That was a big FUD item in 2022. Oh no, Evergrande collapsed and this and that and yada, yada. And I think this is why we heard about a week ago that China is weighing measures to prop up its stock market, and they could reportedly mobilize $278 billion, which is about 2 trillion yuan. Bailouts, folks. That means money printing. That means global liquidity on the rise, and asset prices will rise with it. So here you go. Here are the facts. You see the writing on the wall and what's on the horizon. So hopefully you recognize it and you're taking your positions in the market accordingly. Obviously, do your research. Obviously, don't buy pumps, buy the bottom, buy the pullbacks, buy the blood on the streets. Now, folks, today was a big day. Yesterday, I advised you all of Google updating its ad policy around crypto, allowing crypto companies to do paid search ads and much more. Well, folks, in yesterday's podcast, I said, look, these ETF issuers are probably not going to jump out the gate and start advertising. Well, I was wrong. All of them pretty much launched their Bitcoin ETF marketing today. So many folks were sharing screenshots on Twitter highlighting what they were seeing. So Van Eck, Blackrock. We also had here Franklin Templeton. So the mass marketing of Bitcoin has kicked off, and it's going to happen in multiple levels: digital marketing, online marketing. You're going to see TV and radio and print ads. You're going to have the brand awareness and education of the RIAs and wealth managers. So don't be surprised if we see a Super Bowl ad, maybe from one of these players for their Bitcoin spot ETF. I'm not guaranteeing that. I'm not saying it's definitely going to happen, but don't be surprised if we see it. So we are still very early, guys, in the early innings here. There's going to be more capital flowing into the market. And actually today I interviewed Sandy Call of Franklin Templeton to talk about their Bitcoin ETF. It's a really great conversation. She's super smart and was early in crypto, ahead of the curve. And I plan to publish that interview by Monday next week. So you don't want to miss that, guys. And Franklin Templeton's been around for a long time. They have $1.6 trillion of assets under management. Exciting times, my friends. Now, we got some data here comparing MicroStrategy's Bitcoin supply versus Blackrock. And Zach Guzman of Coinage Media shared some great data and a chart here calling it the other flippening. He said BlackRock continuing to stack more than 52,000 Bitcoin worth over $2.18 billion for their spot ETF. They are pacing to pass Saylor's MicroStrategy Bitcoin bag this year. Folks, BlackRock ain't playing around. And of course, they are the world's largest asset manager. They have, I think, over $10 trillion of assets under management, and BlackRock is very powerful. So they are sucking up all the Bitcoin out of the market, and there's going to be a big supply and demand shock, especially after the halving, because remember, the block rewards are cut in half, so less Bitcoin is being put out in the market. Incredible. And look, this is, I think, going to work out really well for Michael Saylor. I think he took a huge bet. I was worried for him in the bear market because he took out debt to buy the Bitcoin, but he's out of the woods. He came through the bear market, and now he's in the profit, of course, the MicroStrategy's holdings. So he could end up becoming one of the richest men on earth as Bitcoin continues to get adoption, and you have all of Wall Street clamoring for Bitcoin. And the supply, of course, is finite. It's capped at 21 million. It becomes much harder to mine Bitcoin as the future halvings come along. The difficulty rate increases. So incredible stuff, folks. Incredible, incredible. We have a really interesting comment here from Joe Colarsari, if I'm saying that right. He's a commercial litigator supporting Bitcoin. He said, spoke to an individual over the weekend who kept a very large Bitcoin position in self-custody since 2013. He's selling 75% of it to move it into ETFs. Very interesting. His justification was that it's just way fewer headaches for him and his family to have it at the ETF. Folks, I read this and I'm like, it absolutely makes sense. Look, at some point, I may even look to do that. Now, I absolutely believe in self-custody. I self-custody majority of my crypto. I have some on exchanges that I swing trade, but the majority of my long-term hold bags are on hardware wallets. And there's some Bitcoin I plan not to sell. It'll be for my daughter and so forth. But look, life happens. And what if 15 years from now, I don't have the time to deal with this, or I'm doing other things. Maybe I can put it into an ETF and put it into a trust for my daughter or something like that, right? The point is, like I said, life happens, and we are not always in a position to manage these things. So like the person he spoke to said, there'll be fewer headaches. So I can see a lot of people going the ETF route. It's fascinating. The thing that sucks, though, is that you have to sell and then buy back into the ETF. So you'll incur some capital gains taxes, and that's the part that sucks. Now, this guy sounds like he's holding a lot, but maybe the taxes are, less of a headache versus the management of the hardware wallets and all the things you have to do. So very interesting comment, right, folks? And I would love to hear what you all think about it. Now, quick word from our sponsor, and that is Uphold, which is a great crypto platform. I've been using them since 2018. They have 260 plus cryptocurrencies. You can buy Bitcoin and all the top altcoins. You can also trade precious metals on here, gold, silver, palladium, platinum as well. And they have a great platform and great app. It's easy to use. And best of all, folks, they are fully reserved. They have transparency reports, so you can check out the audits and all that stuff. They don't commingle or lend out your funds. I've interviewed the CEO, the CFO, so I can vouch for this platform. Like I said, I am a user. I have been since 2018. So if you'd like to learn more about Uphold, check out the link in the description. Now, folks, we got news here. European securities regulator seeks limits on non-EU crypto firms. So the European Securities and Markets Authority wants to protect EU crypto firms and customers with the proposed guidelines. Folks, we are seeing globally governments moving towards regulating crypto, not banning it, not outlawing it, and things along those lines. They're embracing it. And we've seen so much FUD over the years, right? China's banning, India's banning, and they all have to reverse, right? There's still the laggards out there, but look, they'll all capitulate, right, folks? But the big countries are embracing this. So the consultation paper published Monday seeks comments on the proposed guidelines that aim to offer clarity under the markets in crypto asset rules passed last year. That's the MiCA regulations. Here's a quote. In order to make sure that the clients of crypto asset service providers benefit from full rights and protections afforded to them under MiCA, and that EU CASPS, I'm not sure what that is, are not put at a competitive disadvantage compared to a third country firms vis-a-vis EU clients, the paper said, it is important to actively protect EU-based investors and MiCA compliant CASP, CASPS, I guess that's the name of businesses, and undue incursions by non-EU and non-MiCA compliant entities. Firms outside of the EU would be banned from solicitation. Under the guidelines, solicitation would include ads, sponsorship deals, and even influencer or celebrity solicitation. So when they say ban, they're talking about companies that are not headquartered or based in the EU. So they're not saying that they can't operate there, but they're going to give preference to the companies based in the EU and help them to have the advantage, which makes sense, right? You would have like US-based companies would have the advantage over an international company that's coming to do business here. So it is what it is. And notice the guidelines, they're trying to regulate sponsorships and influencer and celebrity solicitation. I think there needs to be some level of guidelines there. It shouldn't be too heavy-handed because, look, the marketing, advertising, sponsorship thing is a normal business practice that exists out of crypto. It existed before crypto. Let's just look at what happens with other podcasts and TV shows and so forth. And obviously there should be some guidelines to protect from scammers. Obviously there's things you can't avoid. Like it's sometimes hard to flag if a company is doing nefarious things, like FTX. All the big brand deals, all the partnerships, all the money they were spending, you wouldn't think that they were running a shit show, right? Which they were. And this goes back to not just crypto, but the TradFi market. Just look at Bernie Madoff. No one suspected, right? Because of the circles he moved in, his friendships, the how long he's been around. So it happens, but you do want to avoid the pump and dumps and the bit connects and the Ponzi schemes. You definitely want to stop those. So folks, great news. We are headed in the right direction. And, game theory will play out. These big players like the EU and UK start doing their thing. Other countries will follow suit. Now, we have an update here on PayPal and their stablecoin. PayPal Ventures uses its stablecoin for investment in crypto transfer platform Mesh. The news follows on PYUSD deployment proposals on Aave and Curve. So folks, if you don't know, PayPal launched a stablecoin last year on the Ethereum blockchain, and it's certainly a competitive one, its market share and market cap has been growing significantly. So PayPal announced on Monday a $6.5 million investment in Mesh, a company specializing in enhancing digital transaction security and efficiency. $5 million of the investment was paid in PYUSD. This marks PayPal Ventures' first known crypto investment since May 2023, when it invested in Magic Labs, a service focused on providing secure and user-friendly digital wallet solutions. Mesh is building a product for users to move crypto between different financial accounts and wallets. Fellow investor Galaxy likened Mesh to Plaid, but with the read, write, and transfer capabilities. PayPal Ventures' reason for making the investment in stablecoins as opposed to fiat was not immediately clear. Well, I think it's pretty clear, right? They are trying to inject their stablecoins where they can and increase the utility. And obviously, getting this type of PR coverage before using the stablecoin is great. So they're trying to expand the market share of their stablecoin because they're competing with USDC as well as USDT and others. So incredible stuff, folks. We are just seeing the expansion of the ecosystem and infrastructure being built. It's amazing how things have evolved. Now, I'm an AVAX token holder. AVAX is a native token of Avalanche. I'm actually going to be interviewing John Wu of Ava Labs pretty soon, so you don't want to miss that interview. But here's a news item I missed a couple of days ago. Ava Labs outlined scaling solution Virix, if I'm saying that right, in plan for Avalanche to reach 100,000 transactions per second. That's pretty incredible. Now, AVAX or Avalanche, they're doing some big things, guys. Remember, JP Morgan is testing some DeFi tokenization stuff, and it includes Avalanche. So they are getting adoption. So Ava Labs released the outline for its scaling solution, Virix, if I'm saying that right, as it hopes to achieve 100,000 transactions per second. Benchmarks should be released in the next few days, and the scaling solution will be enabled on the first Hyper SDK testnet in Q2. So, folks, what we're seeing is many of these blockchains are iterating, and they're making improvements, and they're trying to scale where they can have faster transaction times, cheaper fees, and this is what's going to lead to adoption from enterprises and commercial services, where you can have consumers come in and use platforms that are running on these blockchains. They may not even know the blockchain is behind it, but it has to get to that point, folks. Just like the internet, right? I don't need to know about the protocol and how it's all working. I just need to get on the web and do what I got to do. That's where we got to get to. And it's not that everybody needs to know about the blockchain or the token. I think a good majority of the public will know. And those who are financially savvy and tech savvy, like us who are early adopters, we have the opportunity to take a position in the tokens of those said blockchains that are getting adopted. And that's what we got to look at. We got to look at news like this, right? What are they doing? What are they building? Who's building all of them? Are they getting real world adoption? Are they solving a real world problem? That's how I'm looking at these different tokens. Now, don't get me wrong, there is a speculation layer here. And, we see a lot of tokens pump that don't really have much use cases, or they don't, have real world adoption yet. So you can make money from a speculating standpoint, but it's much more riskier, right? And this is why I don't really play around with new tokens that, and some other YouTubers and so forth would say, oh, here's a 500x gem that you should be aware of. I don't do that stuff, right? I'm looking and researching and reading and analyzing what's happening. And it's just, look, I'm not hating on people who invest that way. That's fine. But you just understand the risks is essentially what I'm trying to say. Now, final item here, guys. Elon Musk tweeted out that the first human received an implant from Neuralink yesterday and is recovering well. Initial results show promising neuron spike detection. Wow. Neuralink, as we don't know, they're creating a general purpose high bandwidth interface to the brain. It's incredible how far technology has come. Just fascinating. Now you may say, Tony, why are you telling us about this? What does this have to do with crypto? Well, folks, eventually all of these things will connect to blockchains, right? And the way we transact with each other and how things are done, your digital identity, the way you pay for stuff. So it's just the convergence of blockchain, crypto, AI, tech, new healthcare tech like Neuralink and so forth. it's just fascinating, folks. We are in that next industrial revolution, as I discussed with Kathy Wood in my recent interview. It's amazing. And Elon is playing a big part of it. Whether you love him or hate him, the fact of the matter is the results are there. And, EVs are a part of that with Tesla, what they're doing, solar and AI, of course. It's incredible. So, and like I said, a lot of this will include blockchains and crypto and so forth. That's the future. Now, folks, that's the news. Let me know what you think. Leave your thoughts and comments below. Hit the thumbs up button. Hit the 5-star rating on the podcast platforms. Folks, please follow me on TikTok, LinkedIn, Instagram, Facebook, as well as Twitter X. Links will be in the description. Please also sign up for my free email newsletter. It's 100% free. I'm not asking you to buy anything. I'm not asking you for $1 or anything like that. I'm just saying follow me, subscribe. It really helps to support the podcast. And like I said, it doesn't cost you anything. Thank you for watching. Thank you for listening, and I'll talk to you all later.